Okay, so you have this concept of tax amnesty. You remember, class, that they also have this plan. The government has plans to reform the tax code, and the last tax amnesty or the law that granted tax amnesty was Republic Act number 9480 for the taxable year 2005 and prior years. After that, there was no more tax exemption. But the general part, the tax amnesty is a general pardon of the intentional overlooking by the state of its authority to impose penalties on persons otherwise guilty of violating tax law. Now, it partakes of an absolute waiver by the government. And tax amnesty, much like a tax exemption, is never favored. We remember that, or presumed in law. It must be construed strictly against the taxpayer and liberally in favor of the taxing authority. Now, it depends upon the law on what are the conditions of availing the tax amnesty. And for the last tax amnesty act, withholding agents, they are not included. Those with pending cases falling under the jurisdiction of the Presidential Commission on Good Government, those with pending cases involving unexplained or unlawfully acquired wealth, with pending cases filed in court involving violation of anti-money laundering law, and pending criminal cases for tax evasion and other criminal offenses, etc. But this is just pertaining to Republic Act 9480. And who knows what are the conditions that might be laid. I've heard, I don't know if still pending. I think that they want to have tax amnesty on state taxes, especially the problem of the uh, unregistered lands or the co-owners that haven't really registered their inheritance from the parents or from the ancestors. And okay, there is this compensation and setup. The general rule is that our jurisdiction disfavors set-off or legal compensation. In fact, in CIR versus City Trust Bank in Corp, taxes are of distinct kind, essence and nature, and cannot be classed in the same category as ordinary obligations. Applicable laws and principles governing each are peculiar and not necessarily common to each other. And public policy is better subscribed if the integrity and independence of taxes are maintained. In several instances, prior to the instance case, we have already made the pronouncement that taxes cannot be subject to compensation for the simple reason the government and taxpayer are not creditors and debtors of each other. Okay? That's how you discuss compensation in setup. Our rule is that there can be no offsetting of taxes against the claims that the taxpayer may have against the government. Okay? And you might want to read also South African Airways versus CIR. That's the rule. You have several. I didn't cite the cases here wherein the Supreme Court allowed compensation, but it's a totally different matter because what was discussed there is actually the debts are all liquidated or demandable, but as a rule, again, I repeat, tax cannot be set off with your claim from the government. You also have this concept as distinguished from toll. In Diaz versus Secretary of Finance, a toll is different from taxation or tax. Toll is the fees paid by public to tollway operators, while taxes are not. You pay that to the government. A tax is imposed under the taxing power of the government for the raising of revenue. All fees are collected by private tollway operators as reimbursement for the costs and expenses incurred in construction, maintenance, and operation of the tollways. So just read Diaz versus Executive or the Secretary of Finance. And it can also be distinguished from license fee, Progressive Development Corporation versus Quezon City. A license fee is for, regulation. Question is related to occupation or activity that so engages the public interest in health, moral safety, etc., etc. Taxes, if the reason or the purpose is to raise revenue, then that's taxation. If the purpose is to regulate, then that's license fee. That's license. Okay. You also want to read Chevron Philippines versus Basis Conversion Development Authority. And direct tax versus indirect tax. This one is, well, as you will notice here, direct taxes are those that are extracted from the very person who is intended or desired should pay them. They are impositions for which a taxpayer is directly liable on the transaction or business he is engaged in. Indirect taxes are those that are demanded in the first instance from or are paid by one person in the expectation and intention that he can shift the burden to someone else. An example of that is VAT. Example of direct taxation is the income tax. Just read CIR versus PLDT. The main or the fundamental difference is that indirect tax can be shifted to, or the burden of taxation can be shifted to another person, while a direct tax, well, the taxpayer has to pay it directly to the government. And indirect tax versus withholding tax. Read Asia International Auctioneers versus CIR. Indirect taxes like VAT, excise tax are different from withholding taxes. Distinguished in indirect taxes, the incidence of taxation falls from one person, but the burden thereof can be shifted or passed on to another person. While taxation or the withholding tax, the tax due from the income payments to entities arising from certain transactions remits the same to the government. It's really different. Indirect taxes pertains to, well, you can shift the burden of taxation, while withholding tax, it's like, well, those of you who have worked, you have this withholding tax for in your payslips, which you really frown every time you see that. That's withholding tax, and it is not an indirect tax; it's direct tax. Actually, the idea of withholding tax is just you remit. Somebody remits the tax, the corresponding tax, approximately tax pertaining to the income that you receive, but it's not actually the final tax. Well, because we'll discuss later about the the difference between withholding tax and the final tax. But just read Asia International Auctioneers versus CIR. And we also have this tax pyramiding people of the Philippines. What is that? The tax that is imposed upon another tax. It has no basis either in fact or in law. Okay? And taxes are prospective in nature. Unless so expressed by such law, these taxes must only be imposed prospectively. Okay? You also have a taxpayer suit. It requires illegal use of public money. Laliana versus the chairperson. All the taxpayer has to allege is that there is an illegal disbursement of public money such that your tax suit would be given due course. And lastly, okay, remember that taxes are imprescriptible. The prescriptive periods provided in law like Section 203, 222, Section 1603 of the Tariff of Custom Code, Section 194 and 270 of Local Government Code pertain only to the right of the government to examine, assess, and collect the taxes. But the general rule, taxes are imprescriptible. That's provided in Commissioner versus Ayala Securities Corporation as early as 1980. Okay, so that's about it for the principles. We will discuss income taxation next.